So far this month, I've only had 3 red days. And now this isn't some magic or some sort of secret hack, but I will show you in this video exactly how I do that. I'm going to break down my trading performance looking at TradeZella. I'm also going to show you an example of some of the setups that I look for on a daily basis to ensure that I have consistent cash flow in my top 1 futures trading account. Let's look at the stats. So over here on TradeZella, you can see right here, 80% daily win rate. It's pretty solid, I would say. 5-day win streak, not too bad. And the Zella score, as you can see right here, recovery factor, consistency, and win rate. Those are the strengths of this system. Those are the things that I personally value as a trader. So it makes sense to see that those things are now being tracked accurately. I've changed a few things about how I approach the market. As you can see, the last 2 days, if you watch yesterday's video, I was down a little bit, about break even on Thursday. However, during Asia, I was able to recover it. That day was kind of back and forth. We'll look at some of the trades that I took here. Essentially, this is just a choppy day, right? Just back and forth. I could have got positioned for the upside better. I got wicked out a couple times and ultimately just kind of traded some rotations. Show you the last trade I caught. Nothing here is too insane, just like this is a inversion type trade, trailing into profit as it expands. Pretty good execution. I'd say exit efficiency is pretty on point. If you look at something like, typically you'll see the intra trade P&L right there. But with this, you can tell obviously there wasn't any severe drawdown. It just simply went up after this inversion. But looking at today, I think there was some better examples. As you can see, $283. I actually did take like 2 stops on the same idea before it worked, which was unfortunate. I'll show you exactly where that happened. Stuff like this sometimes will be the case, right? Like I get in, I was looking for the break on the 32nd of this as an order block, and it just pulled back pretty much to the bottom. As soon as it flipped to the right side of the V, I went ahead and took it again, and I was able to catch it. So that profit that you saw in the day should have been realistically just a little bit bigger, right? As you can see right here, fucking nailed that. Nailed that trade. Very good setup. Just kind of trading the range. I'll break down the idea that I was looking at, but just one last time to look at TradeZella, 6,500 on the month so far. A couple days left. More than likely, I'll kind of just probably just not do anything. I'll probably just leave it alone. Or do very, very, very little. There's no point in me pushing it right now, especially with NFP next week. But let's review the trade idea for today. I share this stuff with the Discord every day, but essentially I was watching the reaction to prior week high, as well as how did we interact with this daily pivot. I figured we'd stay somewhere around prior day high based on the location. We swept this. This gave me the bias, right? That weekly gap, or that daily gap rather. And then from there, just look to see how can I position between these levels. Now you can see, simply just using the 15-minute, you get downside level, upside level, break and retest. You could either short into it, long, or just take the flip. A million ways to skin the cat, but looking at the stats on my top 1 futures account, you can see that this is in fact the same thing. You can see this is my equity curve as well, my daily win rate. The days are tracked slightly different on here based on how they link them, but that's just the difference between top 1 and how it looks on TradeZella. But the P&L is about the same. Identical. Profit factors on point. Could cut out some losses, but the losses are outweighed by the wins, and that's typically what I care about. So what I really like to do when I'm approaching the markets is have a very simple framework. So if I'm showing you how I take these trades, I want you to understand one thing. You can do this a million different ways. Like you see this daily pivot that we have, we get this nice interaction with this fair value gap that forms. You can easily take this long right here for the PM session up to this wick. That's a trade in my playbook all day, every day. You could even take the continuation right here through the order block. You do that like a ton. Or you can even take the short here if you were so inclined to. That one's not so much my trade. I might take the order block right here. But I simply look for the rotations. Are we below a level? Are we at a level? How can we react? How can we break and retest? And you see that between prior week high, daily pivot, and prior day high, we have a lot of interplay. And you could trade that a million different ways. So it's really important to understand that when you have a simple framework, you can be a little flexible with how you apply it. I don't have to just buy the dip. I can even short into that daily pivot. This is a perfectly fine trade in my playbook. I would say that if that's something that sticks out to you, go for it. So yeah, the trades that I was looking at really were essentially in here for this. I figured that was a really clean move, was able to trail out. Once it's failed to kind of push in a prior day high immediately, I was just kind of done with the trade. To keep it short and sweet, I did try a trade right here. I thought it would hold, but ultimately that was VWAP right there, rejected. Did look at a little bit of gold. I'll share that with you right now. I figure gold would be a little bit stronger in the morning just based on the daily. I was looking for it to reclaim prior day low. However, we just didn't get that. We never got the reclaim a prior day low when I was looking at it. So when you look at the 15-minute, I was trying some, and now you see it moving, right? You see it moving now. But I was looking for this to kind of push back to prior day low about right there and then target that. Never got the move, was able to kind of just get out pretty much small loss or whatever. But I'm not too concerned about any one trade in this type of strategy and this type of market. I'm simply just looking to take small paper cuts until I'm able to align for bigger moves, align with the bigger trades. And ultimately, I feel like the move that I caught from here to here, one of the best trades of the day, in my opinion. And, as long as I'm within my risk parameters, the 1750 daily loss, I'm perfectly fine. So as you saw, I went down a little bit in P&L on the day. Went down a little, then finished strong, and then just walked away there. Kept it simple. Could have made more, maybe, but that's never really the point. Just add to the P&L. And again, all of this is on my Top One Futures account. Top One Futures, check them out. I have a code. Use the code. This is why I trade up 150K, $400. The profit target's 2% for now. After Sunday, for new accounts, that will be going up. So if you are sitting on the fence, just grab an account. It's going to be easier to get the payout. You can basically risk up to $3,750, or you can have an add-on which removes that completely and you risk the full 6K. Stay within the 20% consistency rule. Use code DTA. And honestly, it's a great deal. It's a great system. I enjoy it. A lot of my students have already got payouts from them, and it just makes my job a lot easier as a trader, just having it instant funded without having to go through the headache of passing all these evals. And I think that's one thing that I kind of want to communicate to you guys. How are you spending your time? Are you spending your time efficiently by trying to force an eval and pass that real quick? Or are you developing bad habits? And same thing could go for your trading. If you sit around and say, you know what, I need the perfect market to get a trade, and you only take a couple trades a month, that's not going to get you consistent payouts as a prop firm trader. You want a system that's going to get you green every single day. And that's the one change that I made this year, is that I'm simply leaning back into a higher execution model. Now, it doesn't mean I can't catch big moves. That's a strength of mine. But another strength of mine is the ability to manage profits. If I'm able to get into break even or trail into profit aggressively, that avoids the necessity to take a loss because you'll be simply in profit when it stops you out. So consider how you're actually approaching these markets. If you're doing stuff that is setting you up for success, such as doing things that will get you profit in your account, then you're on the right track. However, if you find yourself getting frustrated and you're accumulating a lot of losses, I mean, that equity curve is going to reflect exactly that. You want something that goes up, something that's green every day, something that's easy, right? Like, you can have the most advanced model, but if it's complicated, chances are you're going to fuck it up. Where you can have something super simple and apply it, like I showed you with these levels that we're talking about over here on Top One, looking at these levels. I mean, you have a long at prior week high, you have a long or short at daily pivot, and you have a long again at prior day high. Now, what this looks like on the lower time frames, kind of get into it right here. A million different examples. So you can enter here, enter here, enter here, this continuation, and you just structure your risk accordingly. Like, if let's just say I bought this to target maybe whatever this gray area is. I bought right here, stop right there, moves, trail it, target. Do you need it to be more complicated, or how about this? Boom. You get in right there, stops there. As soon as it pushes new highs, break even. As soon as it dips, break even again, or like add to the trail, make it tighter, and then hold all the way up, just trail, 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 trail. Maybe you get stopped out right here. But I'd say this is a good enough move to make money on the day. That's about 80 points. If you can't make money with that, you're doing something wrong. So just keep in mind that trading does not have to be complicated. You can make it super mechanical with a discretionary approach. I only will execute at specific levels. And if we're not there, then there's really no trade for me or no reason for me to get involved. But let's wrap this video up with one thing really quick. Just a quick run through some charts. Look at some of the charts that we're seeing. Apple's monthly chart looks insane. Daily chart looks good, right? So what we'll do is actually right here, we'll have the 24-hour chart for stocks. I like this a lot better. You see Apple's mirroring the market, obviously. So earnings coming up, earnings season's in full effect pretty much. You can expect that a lot of these bigger names, especially big tech, will start driving the market. So we had Google recently. Not too much from Google, just a little rally and gave it back on earnings, right? So a lot of these stocks are resembling this kind of base, and I think this is going to be where we bottom out. As I've been saying, I do believe we're going to go higher, and I do believe that this recovery will be faster than most people are anticipating. Amazon here again, you can see that we have earnings coming up, and we also have the same base formation. So are we going to get this inverse head and shoulders? That's what I'm leaning towards. You can look at a few other names. Some of the names we've talked about recently, Palantir was one of them. We were talking about Palantir over here, and now we're up about 20% on Palantir. So it's good to see that these stocks are now moving higher. We have a few other names that we've talked about, and I'll just share with you the watch list that we went over. This is the same watch list. Should be right here. Yeah, the Apple, Amazon, right? Tesla earnings, we're still talking about this range. We have yet to resolve that range. NVIDIA, same kind of deal. It's this downtrend. Eventually, this thing will break and retest and kind of go. These big names move the market. They move the ES, they move the NASDAQ. You got to be paying attention to this stuff in this market, especially. You see the Metas, earnings coming up, same kind of deal. Let's see the hood. Hood we talked about over here at 50-ish, right? It dipped a little lower. Now we're back to about 50. So now we are potentially setting up for, again, a head and shoulders. Here's your change in state if you want to look at it that way. Your QQQs, very similar. SPY. But the more important stuff that we're going to be focusing on, I'm going to go over some quick weekly time frame analysis for you guys on the NASDAQ and ES. Outside bar week. That is a strong reversal signal. It's an outside bar. It closed above prior week high after sweeping below. Believe it or not, we talked about the failed break of the prior week range, and then we talked about a return into that range. Now we demonstrate strength by closing above it. Same thing you'll see on ES, more dominant here. So what is our next upside target? It's going to be 5,800 at some point. NQ, you're going to also see 20,400. It's these same levels, and we're just going to stair step up. So keep your eyes on these upside levels. Find areas for us to dip, look to get position there, and then you ride those legs up. It's the opposite of when you obviously sell off. You're looking for the areas where it's just going to quickly break through. You're looking for areas for us to build value. Where are we going to build value? Where can we hold? And where can we ultimately move up from? So YM, not as strong. Obviously, there were some downgrades and things of that nature with YM, like about a week ago, I believe. And, we could look at a couple different markets. Crude, kind of not the best looking. Makes sense where it's at. Bottom of that range, kind of holding it. And ultimately, let's see what gold's doing. Gold's been on a generational tear. Yeah, gold is the strongest tech stock in the world, apparently. So upside for this should be reasonable until we're given reason to think otherwise. So hopefully you guys found some insight in this analysis. I'm going to also share with you the VIX continuing to fold as we've discussed. VIX is the volatility index that demonstrates and represents fear and options pricing in the market. When VIX is high, your options implied volatility is high. That means that the market's also going to move pretty sporadically because of the 0-day to expiration options. It's going to devalue those. With the index, options are important. They influence how price moves. This is stuff that if you're not aware of, you're going to be stuck missing the mark on some of these moves. So with that being said, low VIX environment means that size will continue to increase steadily with the trades that we're taking. If we look over here at even just NASDAQ or ES, pull up the ATR, we see that ATR is still rapidly, it has increased and held, but it is slightly decreasing right here, right? So ATR, once we get back closer to that 400 daily range in terms of points, then we can start upping the size, potentially looking at trading some minis. But as it stands right now, this is our nice base that we're working from. Use a couple different tools, look at it however you like. You could pull up the volume profile, check out how we're looking on that. You see that, yeah, we're at a near, like if you look at maybe the last year or two, you see that this is a point of control. We don't need indicators to tell us that. We could see it on the chart itself. We can see that this is a base forming. This has been the most volatility I've ever seen. So of course there's going to be a lot of volume associated with it. The question is, however, do we hold the break and retest of that? Do we jump the creek, as Wyckoff would say, or do we simply resolve lower? I am betting on upside. I've been saying it. I think it's clear as day. I think this is the most obvious bottom that we've ever had. And I think a lot of traders are going to be stuck on the sidelines thinking that, oh, it only has to go lower. Things only get worse from here, as they're talking about stocks crashing right here. You guys have to be real with what markets do. They zig and zag. And honestly, when something dips, there's a lot of uncertainty. And now we're starting to see clearer paths to resolutions in terms of the tariffs. Think higher prices. That's what I'll stand on. And that's what I'll leave you guys with. So until next time, leave a like, check out Top One, use my code, share this video with somebody. And if you're not already subscribed, subscribe. What are you doing? We'll talk soon. Later.